Yo, what's up? What's happening? So I am looking at the market in general. So let's go on gold. Let's see what is happening with gold. So uh, if you look at gold, uh, we have been in an uptrend. So we've been in this beautiful uptrend on gold. If you go on the daily, you will see that we've been on this beautiful uptrend. We started this trend from 1621. So this was the breakout at 1800. So we've seen this beautiful uptrend. And in the past days, we've been seeing this consolidation. So this was last week, all of this, and this was on Friday. So this current bearish candle is today. So what has been happening? We've seen gold break out from 1900 and broke first in 1930, and then broke and made a new high of almost 1950. But it has not been able to break above 1950. So we've seen that gold has been making a reaction every time it got to 1917 or 1911. So let's say gold has not been able to go below 1900 since in the last week. So let's go on the H4 on the daily. Okay, this is the daily. Let's go on the H4. This is the H4. The For our chart, we can see that on the 4 hour chart we can see that uh, the gold has been respecting this zone. So basically, it's been respecting this area around here. So the trend is respecting itself, but we can see on the H4 that we've been having a consolidation. Let's call it a consolidation. So basically, from here to here, but mainly to this place, to this zone, to let's say 1917 or 1916. So price has been moving from mainly price has been moving from uh 1940 down to 1917. So let's go more on the smaller time frame and see what's happening. But the most important thing to keep in mind is that we are in a consolidation phase. So price is basically consolidating. So let's go on the H1. Okay, here we can see it better. Uh, Hold on. Let's see. Yeah. So if you take the horizontal line and put it, let's put it here. So uh, let's say that this is the lowest that price has gone. So we saw this pullback, and this is the lowest. And let's say that this is where price usually starts forming. So 1923 around this zone. But let's say we put a line here at where price always makes a rejection from. So whenever price gets there, if you've been trading gold, you would know that whenever price gets to this zone, it makes a crazy, super fast, really quick pullback. Let's go to the minute one so I can show you an example. Uh, Let me show you an example of what happens whenever price gets to that zone on the minute one. Uh, Whenever price gets to that zone, this is what you see. This is what you see. It's a crazy rejection. It doesn't even, it just pulls up. It just pulls up like crazy. So that zone is like there is uh, uh, a demand area. So whenever price gets there, there is this crazy rejection. So let's take it home to minute 15. So let's take it to minute 15. So this is what we're looking at basically. So price is basically moving from let's say 1920 to let's say 1920. Let's say from this zone, price is moving from 1920, and price is mostly getting to 1930, 1934 to 1935. So I'm going to get another horizontal line and put it here. So price is basically moving from 1920 from this zone to 1934, 1935. And if price breaks that zone, price even when price breaks that zone, if price manages to break 1933 area, 1934 area, price goes up to first goes up to this place. To first of all, price likes visiting this place, and then only once we've only seen price break out of this place just once, and tried to break the 1950 but was not able to. So practically we're moving from the 1916 to 19, let's say 1934. So we're moving from 1916 to 1934, and this is a consolidation because if you go on the H4, if you go on the H4, we had an uptrend all the way from here, and now we're having a consolidation. So this is the mark out of the consolidation. So let's go on the minus 15 and see what we can do on this chart. So what I can do, for example, this morning I bought gold around here and I took profit around this zone before we had this small pullback, this push up, and then we had all of this pullback. So what you can do is look to buy the bottom. So anywhere from around here to around here, and look to hold it to around this zone where it's making the highs to 1933, 1934. And then let's say I bought around here and price was moving up. I saw that there was some after this candle. I just had a little bit for this and I went out. So if we see that price is pushing up and trying to break this resistance, we can hold and hope to go to 1950 and maybe a breakout. But if we see price having some difficulty, just go out of the trade, just pull out. Late this night when the market opened, I got in around here. I bought it to this zone. I went out, and then the price dropped, made all of this drop early this morning, and then I got in around here, and then I took it all the way here, and then I went out, and then the price made all of this move. So if I want to do something, since price has been respecting this zone, I can just go to the minute 15 and a minute 5 and on the minute 1 and look for a good entry. I will be looking for something like this, something that looks like a divergence, and then I will be taking a buy. So this is what gold is basically doing. The bottom line is that we're in a consolidation on gold. So you want to go on the H1 and look to buy the bottom and hold it all the way to the top, or sell the top and hold it all the way to the bottom. So this is what we've been seeing. So we've seen price pull back and pull up and pull down 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 and pull up. But I noticed something, that the more price pulls down, when it makes a lower low, it creates a new high. So because it's like we have more entries, we have more when it fails to break the support, more buyers get in. But what you can do is buy the low and sell it at the top. So I'm basically treating the consolidation. So, but you want to be careful before getting in and use your stop loss, because we all know that in a consolidation, if you're caught in a breakout, if the market catches you in a breakout, you're so dead, because it's going to blow your account. I mean, depending on the risk you're taking. And usually breakouts are crazy, so you don't want to be caught in. So one thing I want to highlight is that below 1911, we'll be looking at below 1911, we'll be looking at 1900. We'll be looking at 1900, and below 1900, it means that the trend has been violated. Below 1900 means the trend has been violated. So as long as 1917 is still holding, we're not looking for below 1911. And as long as 1938 is still holding, we're not looking above 1950. So if it breaks out of 1938, we're looking for 1950. And if it breaks out of 1950, we're looking at 2K on gold price. And if it breaks below 1900, bro, we're going back home. We're going back to the zone. We're going back to, who knows, around 1800, somewhere around there. So, but what you should be looking at, what you should be looking to trade is these waves. You should be looking to trade these waves, because you can see we've been here for some days now. So you should be looking to trade these waves. So if you can buy the bottom and sell the top, you can make some nice profit. I just closed 9% on my 100K account today, and I did not really do nothing. I just went with this wave and this wave. So basically, I closed 5% from this, and I closed 4% on this. So this is what gold is doing, and I hope you kill it, bro. I hope you kill the market, and happy trading. Happy trading. Have a nice week.